You told us earlier how Alan Greenspan, the former Fed chief, said that Greece's exit from the euro is, quote, just a matter of time because no one wants to risk lending money to the country anymore. Well, we've seen how the euro has been on a steady path of weakness this year. It's lost 6% of its value versus the dollar in 2015. 15% over the past 2 years. But has this long dollar short euro trade gotten a little bit too crowded? Joining me now with some answers is Todd Horwitz. He is founder of AverageJoeOptions.com at the CME. Todd, if you look at what's going on with Europe and the fundamentals, economically speaking, the Eurozone and the ECB wants a weaker euro.
Good morning, Scarlet. Yeah, all of the worldwide currencies, everybody's trying to push their currency to the bottom because the entire globe is having dramatic troubles here, hence making the U.S. dollar much stronger. But the euro, especially because the euro currency and the Eurozone was the last of this big quantitative easing party, as Mario Draghi just got his approval to go in with the bond buying a couple of weeks ago. So they want to get the euro down lower. But I think what we've seen here, Scarlet, is a market that has been really overcrowded. We've seen a 23-cent move in the euro currency in the last year from the mid 130s down here to 113. Now, I firmly believe that the euro currency is going a lot lower before it's all said and done, but the trade here appears a little bit crowded to me.
A little bit crowded. So what you're saying here is that you don't necessarily want to pile onto the euro. So if you're going to back off on this and perhaps short the dollar and long the euro, how long would you want to do that for?
You know, what I'm looking here is I think we're at a real nice level of support, somewhere in the 112 to 113 level in the euro currency. I think that you can take it's a little bit of a higher risk trade, but I'd like to buy the euro currency here. I'll pay up to 113, no problem. I think we've got a real quick move coming to 116 or 117, which in euro currency terms, that's $1,250 per penny, which means I could make $3,700 to $4,000 in a matter of minutes or days, excuse me, because I think that when it happens, this is going to be a short covering squeeze rally that's going to be quick, fast, and sharp.
And will we see this with the other euro trades, for instance, euro yen?
You know, I think that the euro yen, they're both racing each other down. I'm not a big follower of the euro yen, but I am a big follower of the euro US dollar. And I think that, but we know for sure that every worldwide currency wants to get as cheap as they can because they want to be able to export more goods, and that's becoming the problem in itself.
All right, Todd, when you look at what's on the calendar for this week, we know that Russia, Ukraine, Germany, and France will be meeting this week, a summit to discuss the prospect of peace talks in the Ukraine. Will that factor in at all on the trade in the FX market?
Yeah, I'm sure it will. You know, we've seen, again, some dramatic problems throughout. We've got the trouble in Greece. You've got the trouble in Russia. You've got the trouble in some of the other smaller countries around the world. So that in conjunction with the governments themselves trying to force their currencies down by buying bonds and making their currencies worth less is going to be a problem, and this could have a very big effect. This could be the factor that creates this short covering rally I'm looking for, because at the end of the day, I really want to be a seller at 117.
Okay. We want to bring in our word of the week. And, of course, when we talk about trading futures, we often use the phrase backwardation. Tell us what it means in this context of what you're saying regarding euro dollar.
Okay, well, in the context of the euro dollar, backwardation is not as big a word, but in the commodity space in general, when you see the front month or the near-term price spiking, well, the farther out term is going lower in price. So in other words, if it was happening in the euro currency, if the euro currency was trading at $1.13 here, but out in the future it was trading at $1.12, that would be backwardation. The front month is getting more value because there's a little bit of fear being built in. Backwardation is typically a fear premium that's happening right in the time now and not looking out to the future. It's more common in oil and in soft good commodities, but it is something very much to watch as an investor and a trader. It gives you an idea of what the markets are thinking.
I like the way you put that, fear premium. Todd Horwitz, founder of AverageJoeOptions.com, thank you so much.